This is the Daily Market Comment by Harlan Pospiceros. I'm Maria Pachurdes. Thanks for joining us at XM.com. The US dollar traded lower against most of the other major currencies on Tuesday. With the US markets being closed in celebration of Independence Day on Tuesday, and thereby no economic releases on the agenda, traders may have maintained their short positions following Monday's disappointing ISM manufacturing PMI for June. However, the letdown was not reflected in Treasury yields, nor in market expectations about the Fed's future course of action. Investors are still expecting slightly more than 30 basis points worth of additional rate increases and a series of rate reductions through 2024. With that in mind, traders may pay extra attention to any incoming information that could help them better assess where interest rates may be headed. The next piece of such information may be the minutes of the June FOMC decision. Nonetheless, with officials' views already reflected in the dot plot and Fed Chair Jerome Powell speaking several times since then, the minutes are unlikely to result in any fireworks. Ergo, any volatile swings in the dollar today are doubtful. Investors may prefer to wait for the ADP and ISM non-manufacturing PMI tomorrow ahead of Friday's non-farm payrolls. The yen was also among the gainers against the US dollar yesterday, perhaps as some traders reduced their dollar-yen long positions near the psychological zone of 145 on fears of potential intervention. Only yesterday, Japan's top financial diplomat Masato Kanda said that they are in close contact with US Treasury Secretary Janet Yellen and other overseas officials almost every day, which adds more credence to traders' fears and could thereby result in some further liquidation or hedging of short yen positions. That said, given that Japanese authorities said they are watching the pace rather than the level in the yen decline, a careful and slow breach of the 145 zone in dollar-yen may not ring alarm bells just yet. Wall Street resumes trading today after staying closed on Tuesday for the Independence Day celebrations. The latest piece of important risk sentiment-related information that hit the wires before the holiday was that China will apply controls on exports of some metals used in the semiconductor industry. The move follows warnings from the US that they are considering new restrictions on chip exports to China. Although stocks were not affected by the headlines, given that the latest uptrend in Wall Street is tech-driven, further uncertainty regarding the semiconductor industry could result in a pullback. This was today's Daily Market Comment. Thanks for joining us at XM.com.